What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of MoneyMarkets.com. I'm joined with my research analyst, Matt Clark, and we are recording another episode of Ask Adam Anything. As the name implies, you can ask me anything. I'll try to give you my best answer to what's going on in the markets, how I view the markets, how I view investment strategies. Anything you'd like to ask me, go ahead and do it. So you can put questions down in the comments below, or you can email us. Matt will give you that email address shortly. But certainly write in your best questions and I will tackle them next week. So with that, Matt, let's get started.
Yeah, I think someone actually last week asked what you thought the meaning of life was. So it runs the gamut. I mean, it's all over the place. It's not just about the market. It's clearly very deep probing life questions as well. So if you're looking for any life type advice, then maybe Adam is someone you want to reach out to. I don't know, maybe. But yes, the email address, if you are looking to send us a question to ask Adam, is feedback@moneyandmarkets.com. We'll drop that down below there on the screen, so you have that. But yeah, it's feedback@moneyandmarkets.com. And just a couple of questions for you this week. I'm going to take it easy on you after last week. We kind of barraged you a little bit with 3 or 4 of them. But this week, we got a comment on one of our previous videos. Very simple on YouTube. It says, "Love your videos. Still think MGIC is a buy." Now, let me give you a little bit of background here because I don't think you know what I'm talking about. In February, I had done a Bull and the Bear podcast video where I actually recommended Magic Technologies. It's a software company out of Israel. And, this company kind of bounced a lot of different places. But now this person is asking, do you think the ticker symbol is MGIC? Do you think that MGIC is a buy? So there's your first question. Do you think, was I right or was I wrong?
All right, MGIC. I'm going to pull up a couple of charts on MGIC. First of all, my technical charts as well as the Green Zone 6-factor rating model. I was not prepared for this, but we can, I like to brag. I can basically look at a ticker symbol for a minute or so and give you a very quick idea of whether I would avoid it or whether I would consider buying it. And obviously in our services, Green Zone Fortunes and my options trading service, Home Run Profits, we do a lot more in-depth research than what I'm doing right now. But basically, when you set up systems like a rating system like Green Zone or some of my technical systems, you can get a pretty quick answer. So I'm just waiting for these to load. So it was MGIC, right? I just want to make sure I got that right.
Okay, yep. I like to surprise you. I'm a journalist by trade. So if I show you my questions ahead of time, that's kind of cheating.
Fair enough. So yeah, I can absolutely support this stock as still a buy. Basically, it's in a longer term uptrend. You have better odds of success with bullish trades and lower risk of drawdowns if you buy things that are in longer term uptrends. So like, let's say they've been averaging up over the last 6 months or so. That's kind of one filter that I use in all of my services. So we are in a longer term uptrend in MGIC. We also have some market beating momentum that my system picked up on, ironically, in late February. I don't know, Matt, I don't know if you remember, but this might have been one of the stocks in the top 10 list that we publish every week in our Green Zone Fortunes letter. You don't have to answer that, but I'm suspecting it was because it triggered a buy alert in late February, and it is rated 96 out of 100 on our Green Zone 6-factor model. So absolutely, whoever asked this question, MGIC is still a buy. Currently, it trades just over $16 a share. So that's a great buy at that price. Its momentum score is 70. Its low volatility score is 73. Its size score is 91, which tells me it's a rather small company. It looks like it's about a $700 and some million company. So it could definitely a small cap that could double in price and still be a small cap stock. So you're getting a lot of juice in that type of stock. Value score is good at 66. Quality is great at 86. Its growth is 71. So it's still got good growth metrics. So yeah, this is a quintessential well-rounded stock. It's a small stock, but it has profitability, has good growth metrics, still a good value. It's not overpriced. It's in an uptrend. It has got market beating momentum. So definitely a good call, Matt. That's Magic. That definitely still looks like a good pick. And as far as I understand, it helps companies develop software and applications. So that's certainly in the right spot right now. So the answer to that is yes. MGIC, Magic Software Enterprises, is definitely still looking like a buy to me.
And I'm just breathing a sigh of relief in that you validated that what I said was correct. I feel pretty good about that. So thank you for the question. That actually came on YouTube. The handle was DOV_10565. I don't know who that is exactly, but that's where it came from.
Now, that's a great example, not to cut you off, but I mean, you can ask me general questions as general as what's the meaning of life or what's your philosophy on the markets, but certainly give me ticker symbols. If you want to give me ticker symbols and say whether it's a buy, sell, or pass for now, I'll run it through my system and give you a quick recommendation as whether I think it's up, down, or sideways. So ticker symbol questions are absolutely welcome.
And I just surprised him with it. I saw the question, thought great, took a chance of sticking my neck out there and Adam saying that I was absolutely wrong, which I'm very fortunate that he did not. Now, the last question I have for you for this week is a little deeper, and I think it's going to require a little bit more explanation in terms of your rationale, whether you go one way or the other. The question here is the market going to collapse? And that's it. That's the very general, broad question. Is the market going to collapse?
Is the market going to collapse? Well, if I had tomorrow's newspaper, I'd be able to tell you that with certainty. But I don't purport to be a fortune teller or to see the future. Forecasting is not my gig. In general, I think that you can make a lot more money and better, sound, wiser decisions with your money rather than trying to forecast prices or forecast crashes or forecast rallies. I think that if you use a prudent investment strategy and have smart longs, meaning bullish investments, as well as a number of hedges, you can do far better. You can sleep better at night knowing that if the crash comes, then you are protected. You don't have to worry about predicting the crash. So, one example of this is in October of 2019, I was giving a talk at an investment conference, and I basically pitched a portfolio that was meant to be held rather than tactically traded. I was going to see these people one time at this investment conference, and I wasn't going to be able to give them continued updates or trade alerts. And I thought, what can I give these people as far as a portfolio that will stand the test of time, that will do well, whether the market's up, down, or sideways? Well, little did I know, this was, again, October of 2019. Little did I know that 4 to 5 months later, we would get the fastest, sharpest bear market the market's ever seen with the Corona crash. It started in February and went through basically the 5 weeks into March. So I didn't know that was coming, but I knew that I knew it was going to come eventually, but I didn't know when it was going to come. So basically, that portfolio, I put together 10 ETFs that were long the market, a different flavor. Some of them were focused on momentum factors. Some were focused on small cap value stocks. Some were focused on the healthcare sector in particular, more in particular, the genomics, ARKG. I talked about this recently, but ARKG, the Genomics Revolution ETF, was one of my strategic picks in that portfolio that I recommended in 2019, October, as well as QLD, the 2X, the double long NASDAQ 100. I'm probably giving away too much, but basically I put together 10 ETFs that were long the market of different flavors. And then I knew that if we were going to have a bear market, those ETFs were going to take a pretty steep pullback, at least as much as the market, perhaps more. So I paired those 10 long bullish stock market ETFs with 5 hedges. And there were 5 hedges of different flavors. Okay. So you can't just, different hedges work in different environments. So the Corona crash was very different because it happened fast. And then it gave us basically a V-shaped recovery. So some hedges didn't work as well as other hedges in that environment. Whereas in 2008, it was more of a prolonged bear market where it took several months up to a year for the full losses to play out in several different ways. So other hedges worked better in that. So I definitely recommend, if you're going to add hedges to your portfolio, which you should. Not having hedges in a portfolio is, you basically don't have a full, well-rounded portfolio. But make sure those hedges are of different flavors. So again, I probably shouldn't do this, but I'll tick through the 5 hedges that I gave at the time. We probably can do a show on each one of them. But one of them was VXX, the long volatility ETF. So VXX, it basically tracks the VIX. This was our big winner in basically from mid-February to mid-March. Was up almost 300%. So VXX is a vehicle that I trade in my 10X Profits trading service. We go long VXX when my model goes into risk off mode and becomes protective. But again, that's a tactical strategy. For this investment presentation, I was giving kind of an always on type of protection. So VXX was one of them. TAIL was the other, TAIL. This is the Cambria Tail Risk ETF. Basically, they buy out of the money put options. And those put options kind of bleed a little bit of value when the market's going up. And then when the market goes down, they crank into effect and make a lot of money. So the ticker on that is TAIL. The third of 5 hedges was the Wisdom Tree Managed Future Strategy, ticker symbol WTMF. And that's basically a basket of commodities. So often, they didn't work super well in this Corona crash, but often commodities will kind of go the opposite direction of equities when a bear market starts. And managed futures can go long or short, so it kind of gets that convexity on both sides of the market. So WTMF. Gold was another hedge. So that was a fourth out of five hedges, GLD, just the gold Spider Gold Trust ETF. So again, gold is often up during times of crisis, certainly monetary crisis. I've got a number of bullish gold trades on right now in our Green Zone Fortunes service. So that was the fourth one. And then the fifth one was basically, it was a long stock market ETF, but it was what's called a defined outcome ETF. And again, we could do a whole show on this separately, but if you go to Innovator, INNOVATOR, Innovator Funds, their website will show you a whole suite of defined outcome ETFs. And basically what it tries to do is give you exposure to the stock market, give you bullish exposure to the stock market, but with defined risk levels. So they take a little bit of a cap at the top. So if the market were to go up like 80% in 1 year, you're not going to get that full 80%. But the benefit you get with that is you get a hedge on the bottom. So you can say that once the market's down 15%, you don't want to lose anymore, or you'll take the first 10% of losses, but beyond that, you don't want to lose anymore. So there's a number of there's a whole suite of these Innovator. They're called defined outcome ETFs, and it basically allows you to be long the market, but with a built-in hedge. And it's great because it's kind of a complex strategy. They use options to do that, to do the hedging. But you can buy this ETF or any of these ETFs in their suite, just like you would buy, SPY or QQQ. So that ticker symbol that we actually traded, or that I recommended in October of 2019, was UOCT. But just go to the Innovator Funds website, because those ticker symbols change because they have basically defined outcomes over 1 year periods of time. So each year that passes, they have different symbols, and they have different symbols whether you're trying to target returns in the S&P 500 or the NASDAQ 100 or the small cap Russell 2000 index. So I really like the company a lot. I think that it's truly, they owe up to their name. They are truly innovators in the ETF space with these defined outcome ETFs. And that to me was a great way to hedge some of the downside. And that fund lost very, very little. Just to give you an idea, those hedges, basically the 10 long ETFs with those 5 hedges, that portfolio during the worst of the Corona crash from like February 19th through March 23rd, that portfolio of 15 ETFs was down 3%, whereas all the major stock indices on average were down 34%. So you're talking about losing 1/10 of the market during a Corona crash type of event. And so that's absolutely why you need to be hedged. Will the market collapse? Yes, it's going to collapse. It always has, it always will. But you just need to be prepared for it. You don't need to predict when it's going to happen. But if you have a handful of smart hedges in place all the time, then you can be prepared for that and have your drawdown be much, much less, or even make money during the drawdown. So that's the answer to that. Will the markets collapse? Yes, but you can be prepared for it.
And I think it's great. I think taking that question, is the market going to collapse? Taking a very simple yes or no, question and transforming that into yes, it's going to, but here's what you need to do to protect yourself when it does inevitably happen. It's not necessarily an issue trying to guess when, because no one has a crystal ball. Everyone can talk about it's 6 months, a year, whatever. The goal here for us at Money in Markets and with Adam O'Dell and Green Zone Fortunes and Home Run Profits, 10x profits, is to make sure you're guarded against things like that and make sure you're prepared for those types of things. So Adam, those are the questions I have. Again, if you do have a question you'd like us to ask Adam, feel free to drop a note down below on drop a comment down below on YouTube if you like, or you can email us at feedback@moneyandmarkets.com. That's all I got for you, Adam. I'm going to let you off the hook pretty easy this week.
Sounds great. Thanks a lot, Matt.